The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 8:30 a.m. Friday morning. 60 minutes to go until the opening bell. We got non-farm payrolls coming out as we speak. We'll start with the S&Ps. A little bit of volatility. We just saw some negative action. We'll get that number in a moment. But you just went from about 36.75 in the S&Ps to 36.68. A little bit of a pop from there. We're currently up about 8 points on the session right now. Call it 9 points at 36.74. NASDAQ up 29 points, 12,494. The Dow up 118, above 30,000, 30,039 to be exact. And the Russell up 8 points as well. Commodities, gold continuing to climb from the lows it made on Sunday. Quite the week gold's having, as we just made a weekly high up to 1851. We're at 1849 right now. Silver's up about 32 cents. Notes, a little bit of a reaction as well. We're talking about 245,000 jobs were added in November. That's your headline number. So that's what hits the tape at 8:30 a.m. The market was looking for about 440,000 jobs, 440, 460, somewhere in that neighborhood, depending on the analysis. That's quite a miss, folks. Not quite what you're looking for, as numbers are getting worse, not better. And for the month of November, you're talking about only 245,000 jobs added. I think we're like 10 million jobs off of the rolls from the prior pandemic levels, right? So we need bigger numbers than that in the short term to advance. But the S&P, it shook it off in a matter of seconds, folks. 36.75 on that S&P. We got gold up about $4 right now at 18.44. And as we mentioned, notes and bonds checking back in. No real reaction. The market shakes it off, at least for the first few minutes, following that miss on the jobs number at 245,000 for November. We'll get more of that as that comes out. And let's see, economists, they're looking at 6.7%, the unemployment rate at that 245,000 jobs added in November. Okay. And we'll continue to watch the market because it's always exciting when we get that type of action. But I'm going to pull up some of the news going on. I'm just going to start off with the story last night, if you saw it. So this breaks at about 1:30 in the afternoon that Warner Brothers, HBO Max, they're going to release their entire slate for 2021 simultaneously on HBO Max. I believe HBO Max is about $20 for a month. I know they were talking about in the Den yesterday, you can get maybe a student deal for $9.99, something like that. You can just sign up for HBO Max as opposed to going to their movie slates for a year. AMC, folks, I mean, watch out. I was talking to my dad last night, telling him about this and just my take on it. I happen to pull it up. So there's 1:30. These are 15-minute bars. I'm going to show you real quick how long this actually took to fall apart, because it comes out at 1:30 yesterday, and you see it fall apart. And it's just something to keep your eye on, folks, because this moment was a pretty revolutionary moment in the movie theater business, in my opinion. I'll classify it, right? But one of my friends put it best on our group chat. You might as well file for bankruptcy right now, AMC. Because that business model, now the only thing counter to that, which is why I love options, which is why I love defined risk, is that maybe you have somebody come in and swoops in that buys AMC. I was just thinking, right? Maybe Amazon could come in and swoop in and buy AMC or something like that. Maybe Netflix could. Maybe Disney could. That could happen. But when you have movie houses that are going to be forced, because if HBO's doing it, then, you know, the counter to this argument, it's just cool to think about this as industries completely change. And you're seeing it here with the movie theater business, which is why I've loved Disney for so long. And you've seen the acceleration Disney has had, is that this was a moment where Warner Brothers could not compete with Disney and Netflix and Amazon by putting high caliber movies out solely for their streaming services, right? I mean, you have Disney with the Mandalorian series spending hundreds of millions of dollars on that production that is solely developed for the purposes of Disney Plus. I mean, we all know that Netflix spends, what, $18 billion a year on content. So what does Warner Brothers do? They say we can't service our streaming platform while operating in the movie theater business simultaneously. We have to start releasing the movies that we're spending big money on that can actually compete with Netflix and Disney. We have to start offering those to our streaming platforms. There you go. And that's the death knell. But I pulled up AMC at $4 yesterday. I was surprised it hadn't gone lower. Before you know it, folks, it was down an additional 10, 12%. Watch out for this stock. Very difficult. Somebody could come in and buy that equity, a player in that industry. But as to how they function on their own, when you have movie houses, the likes of HBO Max, pushing out all Warner Brothers films in the next year to their streaming platform. Jumping around to some of the other stocks for that streaming platform, look at this acceleration in Disney, right? I had a channel line up here. We're just jumping right above anything we've done here. We're back above pre-COVID levels, and I think that's going to be, let's back this up, 154. Yep, we just made it above. I think it was 153.41 yesterday. We climb above that level from December, and that's an all-time high for Disney yesterday, coming into that as well. And we'll jump to Netflix. About $500 for Netflix. Put this in some context. $575 was the high there for Netflix shares. Okay, what else we got going on? Let's see. Where are we going to start? So we'll jump around to one of my other favorites with Uber. So they're talking about, and you could make a case for this either way, but Uber has become pretty ingrained in society. Without the ability to travel, Uber is one of the forms of travel that's stayed at least consistent with their drivers. They're trying to make sure that their drivers can be considered essential for COVID vaccine distribution. Seems pretty reasonable to me. You pull up Uber shares. Now, this is a max. I mean, stock has not been public for that long. But a couple days ago, quite the pop that Uber had. With that day, Lyft had revised some of their expectations. So you had Lyft and you had Uber on Wednesday, trading higher, paired a little bit. But this morning, we're up with the market about 50 cents on Uber. And now, check out Uber versus Lyft. Jumping all around. But Uber now well above, which is remarkable, right? Pre-pandemic levels with travel and social interaction so hampered. But Uber, talk about an acceleration of everybody getting on their platform for their food delivery. They bought a company in that time as well to accelerate that. So you see where Uber is. You compare it to Lyft. Not quite the same. Lyft was at $54 prior to all of this. You're sitting at $43. They've still rebounded. I mean, this run, since we found out that vaccines are going to work and we will be able to live a normal life yet again at some point in the future, hopefully the near future, you had Lyft really accelerate because their whole business, I mean, they're trying to get into food delivery, but their whole business is just ride-hailing, ride-sharing, and they're missing out on the gains that Uber's had over that time. Okay, what else we got going on? We talked about Warner. DoorDash, that's a nice transition. They're going to boost their IPO price range amid strong appetite for tech stocks. I mean, there you go, right? It was originally talked about that Uber was thinking about buying DoorDash, I believe. That was a little bit of a worry in terms of the monopolistic tendencies it would create. So they're going to be pushing it out between $90 and $95. 33 million shares they'll be pushing out, raise up to $3.14 billion. They were looking for 75 to 85, so quite a little pop. In 75, that's 15. That's a 20% bump on the bottom range of where they were, and about a 12% on the top range of where they were. Market strong on that jobs number miss. Stay tuned, folks. We'll go over that jobs number a little more. S&P's positive by 13. We'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. S&P's up 11 points right now. NASDAQ up 30, Dow up 116. I got a chart of Snowflake up here. So Snowflake, what they do, they're out with their earnings 2 days ago. And the Analyze tab on the Thinkorswim platform, they are a cloud data platform provider. They enable customers to consolidate data into a single source to drive business insights, build data-driven applications, and share data. It's a cloud data platform, supports multi-cloud strategy, cross-cloud approach to mix and match clouds, multi-cluster shared data architecture, enables governed and secure data sharing in real time, okay? So big-time data company. They come out with their numbers a couple days ago after the close, so Wednesday after the close, I believe, or Tuesday after the close, Wednesday after the close, I believe. Show 119% revenue growth. First earnings report as a public company. So I got the chart up here. This is the daily chart. We're only talking about going back to September 16th. Look at the run it's already had. Look at the acceleration it had yesterday following their earnings on Wednesday night. Now I'm going to jump around because now you get into the Analyze platform again, Thinkorswim. Folks, if you haven't tried out Thinkorswim, they are a sponsor. I use them myself, and whether they're a sponsor or not, I'll tell you, I'll probably continue using them because I love them. They're worth $95.6 billion, this company, okay, as of the close yesterday. Now, I bring it up because when you start talking about these types of valuations, a cool article on Bloomberg out here. Where are we? Come on. Here we go. When you're a CEO and you create a juggernaut of a public company, you usually get rewarded. And how about to the tune of a $95 million payout every single month for their CEO, and you've only been public for about 2 months, barely, 2.5 months. So they reported the numbers. It surged 183% since its IPO on September 15th. Okay, so yes, less than 3 months. Frank Slootman, one of the best paid tech execs. So the compensation package he received, and listen, we're going to go over it. I mean, this is pretty excessive, but the company built's pretty excessive. Okay, we'll go over it. He joined the company though, which was a year and a half ago. Okay, in April of 2019. a batch of options every month for 4 years that are now worth almost $95 million each. That would be $1.1 billion annually. It includes more than 13.7 million options with a strike price of $8.88. Do you see where the stock is trading at, folks? Okay. Again, $8.88 those options are worth. We all know options. What do you think an option is worth that you can buy that stock at $8 and the market's trading at $339, right? He gets a salary of $300,000. Once the full options packet is paid out in early 2023, it's worth about $4.5 billion. He hasn't exercised any of his options, and his shares are subject to a lockup period that ends in March. Seems like this company is doing pretty well fundamentally, though, that's going to hold a true value. The monster pay package, partly a result of Snowflake's surging valuation. Here's the key, okay? It wasn't a gift out of nothing. In October of 2018, 6 months before their CEO joined and negotiated his compensation, the company raised funds at a valuation of $3.5 billion. Kudos to whatever private equity or private investor invested in this company at a valuation of $3.5 billion. He comes in 6 months later. The company is now worth $96 billion. So he is going to get $4 of that billion. 4.5 of that billion. You take that off, there's 91.5 billion market cap left. He came in at 3.5. I'd say that's a pretty decent deal even for shareholders, right? I bet the people who invested at 3.5 are going to be completely cool with his pay package, considering the company is now worth $96 billion. Not easy to go from $3 billion to 96. Remarkable. I don't know what they've done the last year and a half, but it's been a heck of a run, I assume. CFO Michael Scarpelli joined a few months after him, has a similar package. His options are worth $25 million a month. That's a solid CFO package. The co-founder, chief technology officer, owns a 2.73 billion stake. Big numbers, just remarkable. I thought that was pretty fascinating when you talk about those types of pay packages, but pretty remarkable when you run a company up from about $3 billion up to $96 billion, and they're in a perfect space, folks. Cloud is that's, Amazon's ballpark, Microsoft, Salesforce. Salesforce had an interesting week, jumping around, filled this entire gap going back to their August earnings. That gap was about 218 and change. What was it? 218.35. A couple days ago, we make it down to as low as 215 following their earnings. Yesterday, we closed out at 220.97. We're trading at almost 223 on that equity right now, jumping around to some of the others. Microsoft shares, this whole run, we almost made it back to a 382 back in September of 193. Kind of just hovering pretty close to the all-time highs. We got check in on Apple. I'm getting notifications this morning that some of my Black Friday Apple products, they're showing up in the future. Apple holding up really well. We had this one little acceleration where things just got a little bit out of whack to 137. You could call this the real upper boundary line of where we've been, and spending the time of about 125 on Apple shares. All right, folks, next week, we got a special event going on. Larry Pesavento, he has a live trading webinar, Trade What You See. He's going to be talking about the methodology he uses when trading the market. He's going to be live trading in there as well. 5-hour session, kicks it off 30 minutes before the program, 9 a.m. Larry will not be doing his program next Wednesday. He's going to be in there with his students in that webinar, live trading for 5 hours. You can check it out on the front page of TFNN. It's $295. Comes with a month of his newsletter, Fibonacci 24/7. That's a $97 value. It will be archived, so you can watch it as many times as you'd like in the future, accessible on your TFNN page. And anybody who attended the prior 2 classes Larry has done like this, they'll be able to go as well. So it should be a good crowd, a good community, and a great day next Wednesday going on. Check that out on the front page of TFNN. And Larry always puts out a great weekend report for Fibonacci 24/7, so a great time to sign up as well. And the TAS Profile Scanner, if you haven't tried it, folks, you can try it. Use promo code UPGRADE. You save $100 off your first month. Usually it's $197. You pay $97 instead for the first month, and it still comes with a 30-day money-back guarantee. It's a great piece of software at $197, folks. It's outstanding at $97. Check it out. Try it for a month. If you don't like it, get your money back, no harm, no foul, and try that out. I use it, Tom uses it, Steve Rhodes talks about it all the time on his program. He uses it, where those market profiles are. You can see for yourself what he's looking at in this profile scanner, so check that out on the front page as well. All right, the Chinese, they're talking about a breakthrough in quantum computing. Pretty cool out here to think about this. How about 100 trillion times faster than the world's most advanced supercomputer. Now, shame on me. I don't trust the Chinese at face value. So not sure if that's the reality of what's going on when you're getting news from state-run news agencies, right? Nonetheless, that's what they're talking about. And this is the race for technology. Quantum computing seen as the next key to technology supremacy. Google last year said it built a computer that could perform a computation in 200 seconds that would take the fastest supercomputers about 10,000 years. I remember this article. There was a little bit of pushback in terms of what they were exactly talking about. While the Chinese claim their new prototype can process 10 billion times faster than Google's prototype. I mean, the numbers are mind-boggling. But if you told somebody 30 years ago the type of numbers computers could do right now, they would probably find that mind-boggling as well. So why not 10 billion times faster when they're already processing billions of transactions in a second? Stay tuned, folks. We'll go over what else we have going on for Friday. We'll look at those jobs numbers as well. Stay tuned.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the S&Ps positive by 10, NASDAQ positive by 19. Taking a quick look at that jobs number again. Markedly slows. I mean, that's the number. We had some census workers in there that did lose their job. I was just reading in different articles. Yeah, here we go. The main figure reflects a decline of 93,000 temporary workers who had been hired for the census. So you add that in, you get it up to 35,000 and change or so. Nonetheless, they were looking for 460. The unemployment rate at 6.7. that number coming out, we'll see. Market, though, shakes it off. I think this market is just waiting in terms of the vaccine news. They're saying, no, we're not going to sell this thing off on negative news, because we know no matter what's going on right now, 3 months or 6 months, the real important thing is going to be what happens when we open back up this economy, and we got to create all those 10 million jobs that we've lost since the pre-pandemic levels. Okay, what else we got going on? Jumping around. Let me pull up the screen. Where are we? I want to go over real quick a couple charts that I found on Bloomberg. Pretty interesting, talking about, as they put it, 5 charts throw cold water on chances of a Santa rally. I mean, I'm going to go quick. I got a minute left in the program. The Bollinger Bands, which is a standard deviation above or below a simple moving average. We're right up near the top of that level. Option fever, U.S. put call ratio, 5-day average, looking at a 20-year low. There's your acceleration. Broad participation. The equity rally has been so broad that almost every stock in the U.S. is in a technical uptrend. 93% of the stocks in the S&P 500 trading above their 200-day moving average. You see where we are when you back it up, folks, to 2013 all the way. And talk about technology. Although tech shares have taken a back seat in recent, here we go, the tech-heavy gauge up 43%, now trading about 2 standard deviations above its 50-day moving average. That's similar to the Bollinger when you look at it. And then if you take Robert Shiller's cyclically adjusted price-to-earnings ratio, we're all the way back basically to, what do they put it? The peak seen in 1929. We got really out of whack in 2000. But you see, back up there. So stay nimble out there. Put your stops in. Trade with some defiant risk. And stay tuned. Larry Pesavento coming up next, folks. We'll be right back.